So what I wanted to do this morning, we obviously had some great technical analysis. Hope I can add to it. I just wanted to kind of step back and take a little bit more of a fundamental view. I know Greg has done some great work recently on renewable energy, electric vehicles. I want to kind of continue in that theme to some extent and just look at some industry opportunities. So specifically, I want to look at basically information, so IT. Next stop again, or just to keep you on your toes and say, okay, keep on looking for emerging themes in the market. But my presentation will be focused in information technology. So quickly, as Greg mentioned, I work for Castlemore, so I have to provide a disclaimer saying I'm not offering investment advice, advocating purchase or sale of any security or investment. Make sure to do your own due diligence on any stocks you see that I present, or anything really today. Just keep this in mind. You're responsible for any investment decisions you take. So here's kind of my outline. So kind of going with the, going with the hockey theme. I grew up in Edmonton, so I think I have this duty to quote Wayne Gretzky, I think, in every presentation or something like that. But what I'm trying to say is one of his quotes was, "You want to skate to where the puck is going." So what that means to me on the finance and investing side, you want to participate. So us individual investors or portfolio managers, you want to look to participate in industries and sectors that attract institutional investment. So the previous slide, again, talked about renewable energy, EVs, technology. Again, when you're seeing more institutional investment, that's going to provide a tailwind for those industries and stocks. So something to keep in mind when you're doing your investing, to have some exposure to those industries where you're seeing increased institutional interest and investment. Another theme we're seeing is that just something to keep note of. ESG is, it looks like it's here to stay. There is more focus on that, and you are seeing institutions talk about that more. The third point, and what I'll be mostly focusing on, is that technology continues to grow in our daily lives, so look at IT sectors for investment opportunities. So with that, let's get going here. So what I want to show you is, this is just a snapshot of the US population. So looks at the different generations, and basically what I get at is that you can see the big bar charts for Gen Z and millennials, how those populations are basically starting to become the majority of the US population. I'd show Canada, but obviously it's just a fact of numbers. US is a bigger population and the largest economy in the world, so you got to pay attention to some of their demographics. So to continue with that theme, so here if you just kind of look at this pie chart, you can see how millennials and Gen Z make up over 50% of the US population. So what does that mean? Okay, so that means it will continue, these generations will continue to have a greater impact on the overall economy. So notably consumer spending, financial investing, and as I mentioned earlier, social responsibility. A quick couple slides on social responsibility and ESG investing. So what does it mean? I know some people have more knowledge, some people have less. So again, ESG, so environmental, social, and governance investing. So it's also known as sustainable investing. It's focused on investments that seek positive returns and long-term impact on the environment and society. So that kind of captures it. Again, the fact is millennials and Gen Z are really more on board with this initiative. So as they kind of gain more prominence in investing, it's something to note, right? You'll see more companies even. If you see some Amazon commercials recently, they'll talk about how they are looking to become carbon neutral. So you'll see more of these ESG themes. So just be cognizant of that. And again, so instead of just focusing on companies just focusing on profits, as basically what you're seeing is some of these younger generations are saying, okay, I get it, you can make money, but you also have to be focused on these ESG initiatives. So again, ESG issues. So again, environmental risk. We hear a lot of this in Canada, especially around Calgary and Alberta. So environmental risk focused on air, land, water, ecosystems, and human health. Social risks, refer to the impact that companies have on society, governance risk, focus on how companies are run. So that sums up ESG. Just note, again, it's becoming more prevalent. Companies there's more focus on it. You want to be, just be aware of it. And it's better, obviously, to be on the right side of the trend. So quickly, just a couple of risk and opportunities. If you look at industry sectors, so again, with the environmental focus, you're seeing renewables is getting a lot of positive, ESG attention. Technology as well, to some extent, as far as technology is obviously seen as how we get to a cleaner, better environment. So it's given some positive recognition. What you're seeing obviously get hurt is energy. Just with fossil fuels, going back into that previous slide, you can see, again, environmental risks. So when you start to talk about air, land, water, ecosystems, human health, it's obviously been difficult. Energy has suffered, especially fossil fuel side has suffered as far as it just seen as not favorable for the overall environment, air, land. So that's been tough for the energy sector. I do want to move on though. So going to the overall theme in the technology industry, what we're seeing. So we're seeing that the technology sector continues to grow, and many investors need to consider allocating more of their portfolio to this industry. So again, just you're seeing those generations, millennials, Gen Z, they're more comfortable with technology. Technology's become more of our daily lives. It's good to take a good look at technology and looking for some diversification within technology. Again, that's the second point, looking at diversification, look at subsectors and find some diversification among technology. And so we'll break apart some of the industry groups and dive into some investment ideas and some useful tools that will help you find ideas in technology. So what I want to do is kind of break up technology. When people talk technology, it can be such a broad. So what I want to kind of do is take apart technology and look at some ideas. So what I'm going to do here is go look at Canadian non-US tech companies, go into megacap, which is also sends to go well communication services, semiconductors, cybersecurity, mobile payments, cloud computing, artificial intelligence really commingles within a lot of these subsectors. So it's a really overall theme. The important thing to remember with artificial intelligence, largely what we're doing is replacing human intelligence with machine intelligence. And for a lot of the subsectors of technology, that means you're going to improve basically the bottom line. Where you're hiring less people, basically you're removing a lot of your costs, which is increasing profitability. So first thing I wanted to go into look at was Canadian technology companies. So with the relative size in Canada versus the US, obviously you see less Canadian tech opportunities. There are some, we do have a very educated population in Canada, and we have a history of developing good tech companies. So we don't want to throw them away and say, let's just go straight to the US. Larger Canadian tech companies include Shopify, Constellation Software, CGI Group, OpenText. Just looking at those, we'll go into some charts here quickly. But Shopify right now, I'd say of that top group there, the bigger group in Canadian tech, Shopify does look to be the best technically. And then I just want to look at some of the smaller names. So what is interesting is that, you see these big names, but over time you see some of these smaller names creep up, and those can present interesting opportunities. So when you actually look in the charts of some of these names, it does get interesting. So one of those themes I'm going to go to is that a way to kind of find some investment ideas is to pull apart some ETFs. So if you go to websites, you can, go to the XIT, you can very easily kind of take a list. I'll show also there's a way to do a CSV download that basically you can upload right into stock charts. And then you can basically look at those charts, you can convert to an RRG. There's a lot of really good things you can do quite easily. So let me hit some charts here. So what I want to start off with was the XIT. So again, that's the Canadian Capped Information Technology ETF. Just quickly, chart, as kind of Greg talked to earlier, it does, with tech, there is some concern. We've had a good run. We're close to testing the highs, but we look like we're pulling back. Let's just watch here. Again, I'm not saying throw your hat in, throw a bunch of cash at tech now, but also providing ideas if we do get a pullback, some good ideas in technology. So again, here's the XIT. We're still above the 50-day. See if we can get momentum. It'll be interesting in the coming weeks. A lot of tech companies are reporting. If they do have strong earnings, maybe that can kick us up. There's obviously some other things worried with U.S. stimulus, rising COVID cases. But anyways, let's get into some of the charts and look for potential ideas. So quickly, I just want to go through the major charts. Won't spend too much time here. But Shopify, you can see that longer term, you have relative strength. The trend's still relatively intact. Full stochastic trend, say it's still relatively intact as well. Again, this being a weekly chart, it held at the 50 on the full stochastic. On the RSI, held above 50 as well. You can see that there's potentially lower highs on the RSI, so something to watch for. But right now, when I look at the big Canadian tech companies, this looks to be one of the better names. I'll quickly go through, again, one other thing I like to do is, so I'll look at the weeklies, I'll look at the dailies. The dailies can be very, very good for looking at technical support and resistance levels. It's just easy, you're gonna miss some of the daily support levels on the week because it'll meld within the week. Within the daily, I like looking at daily support levels. It's just a little easier to see. So you can see that 1500 level was the top. On the daily chart, what I do like, especially in Shopify, we broke some downtrends in the RSI. So in the RSI and PPO, so that's positive. So, and even the full stochastic. So there is some positive in the dailies. So let's watch that this can hold up. Let's hope this, if you're a bull, hope that Shopify can make higher lows on the RSI here. And then it being a good investment, and the chart continues higher. So that's Shopify. I'll quickly go Constellation. Again, seeing some similarities. Again, you're getting some weaker momentum on the weeklies here. Just see if we can bottom out above and trend higher, or are we going to continue lower? So some of these tech charts, you'll see similarities. So I won't spend too much time, but that's Constellation. This is CGI Group. Again, this chart to me is not looking too strong. We're below the center line on PPO. That's not a strong chart to me. Open text, some similarities. We didn't get up to. Well, I guess we got through new highs, but on weakening momentum. So again, this chart doesn't look too strong. We're testing support levels. So again, the last three charts compared to Shopify look a bit weaker to me. So what I wanted to get into though is that are interesting to me. Well, if you look at, so here we're looking at Lightspeed, again, a smaller Canadian technology company. We'll look at some of the good things on this chart. So again, so there's the weekly. Again, you can see a potential cup and handle pattern here, which is positive to me. A broke above previous resistance, so that's positive. You have RSI with a positive trend, PPO positive trend, so positive trend across the board on these technicals, relative strength as well. So again, that's an interesting chart. So what you're seeing with these smaller Canadian tech names that are very interesting is, again, they're not on a lot of people's radar. They're smaller companies. If you look at, so it's a market cap of $5 billion. If Stock Charts has this updated and correct. So these are smaller companies. $5 billion, we consider how like the size of even the Canadians, like a Shopify, or if you go to the bigger US companies that are talking about $1 trillion, $5 billion is incredibly small. So a lot of people, it's definitely not on a lot of people's radar. So something to look at. That's where it gets interesting, looking at the XIT and looking at some of the smaller holdings. Lightspeed does come up, and it is an interesting chart here. Again, there's just looking at the daily. So this is why I like looking at the daily versus the weekly. Again, the weekly, it looks like you broke above previous resistance. On the daily, you can see you're still kind of testing that level. The previous highs, August last year, 49.70. That's where you kind of got to before you gave back. The chart still looks supportive, but again, just note that you'd feel more comfortable if it got through that, let's call it $50 level. So just something to watch, and why it's good to look at the dailies and the weeklies. Absolute Software, another interesting name. Small Canadian company, as you can see here, only 747 million market cap. What gets interesting here actually has a yield, which is interesting, and has a PE, so it actually has positive earnings. Some of these companies, again, as we saw in Lightspeed, don't even have positive earnings. Some people would rather see some positive earnings. So here we go. Absolute does have some. The chart does look pretty constructive. Again, you look at RSI, PPO, your relative strength, all positive trends. Again, just looking at the daily, and again, the daily here, you kind of see more of a clear breakout, which is obviously what you like to see. And then on the daily, even with the PPO, you can see how it broke a negative trend. So some of these, again, some people want to see a break in a negative momentum trend before getting in. So you can see this absolute has, and it's gotten above previous recent resistance. Docbo or Docibo, I'm not even sure how to pronounce this guy, but again, a good chart as well. Previous highs kind of got through. Again, and this is relatively new. You can see that there's not a lot of information. It just is really about a year old. So again, won't be on a lot of people's radar. A smaller company at 1.6 billion, but something to watch for. Some of these little companies that are relatively new, not hitting a lot of radar, watch the charts because they can be very interesting investment opportunities. Again, this is the daily. You can see how the negative momentum price trends have broken. And you can see there's still positive relative strength. So some of these names are quite interesting, small Canadian tech names. I also wanted to offer just a couple international names. So Baba, obviously, I think Greg talked to Shanghai earlier and mentioned how Shanghai actually looks relatively good. If you remember when COVID first started, how China actually took such a strong stance to make sure it didn't spread. So you're seeing some positive characteristics in China that you're not seeing in a lot of other parts of the world. Again, their stance was pretty very aggressive, and a lot of other nations really couldn't go to the levels they did. But China did, and arguably their economy is showing positive effects from it because they're not seeing the outbreaks in the cases. So just to note, obviously Baba being a massive retailer, consumer discretionary name in China, the chart is, let's say, it's very, very strong. Obviously, if you look previously, was at 230 level. It's obviously broken above. We're at 300. Very interesting name. You can see relative strength is very strong as well. So just note some of these names. Alibaba is a very strong chart and looks to be a strong company. Mercado Libre, just very interesting on the consumer discretionary space. Again, it's focused in Latin America. Just note the chart. Again, it had previous resistance of 1270, and just right now we're challenging that level 1271. So I just want to hit a couple international charts. Those two names do look interesting. So now I just want to, I'll be flipping back and forth between my presentation and the charts here. So the next area I wanted to bring up was mega cap tech. So as everyone's aware of mega cap tech, these are your big technology leaders, huge market cap, proven strength, just massive revenues and profits. So when you're looking at tech, a lot of people, these are the names that everyone knows about. There's not a lot of secrets here. Call them, you can call them whatever you want, mega cap leaders, mega cap aristocrats. So if you look at the kind of the FANG names, mega names, whatever you want to call them. So the alphabet, so call them the big guys: Alphabet, Apple, Amazon, Facebook, Netflix, Microsoft. Again, these are the macro mega cap companies. So everyone, people may get a little may kind of pull up valuations of their size. But the thing is, these are massive companies. They have a huge ecosystem. They have, again, the cash flows are substantial. There's nothing wrong with having a couple of these names in your portfolio. Just, watch the charts. Obviously, sometimes you'll see them start to fade. You can look at momentum starting to fade. But adding these names on weakness for part of your tech exposure isn't a bad idea most of the time, right? These are large established names. Pick the stocks you like, pick the charts you like. But again, having exposure to a couple of these names is not a terrible idea. So instead of looking at these big charts, what I want to do is kind of looking at charts in this area. So look at kind of a lot of these big names have social media and e-commerce, and from that social media have driven an e-commerce presence. So what I want to look at is names that might be kind of maybe potentially could get next into this mega cap list, or at least show signs that they're potentially gonna grow here. So what I want to look at is Disney, Snap, and Twitter. So I'll start with Snap. So I think this is a very interesting stock. It's obviously they have a social platform. It has been seeming like it's been improving with what its offering is and attracting more attention. So you do see it a little more this past week. So it's up 3%. That's what it's showing here. Just note the positive chart. Again, the positive trends on RSI, the PPO. Relative strength as well is still intact. So good looking chart. You can see how it basically got through previous resistance. Quickly on the daily chart, you can see it was in a bit of a trading range and held previous support, and now got through the recent highs that call it 26.76. Got through that. So again, a good looking chart. You know, I like the fact that you can on the daily and the weekly you can see some positive reasons to like this chart. And again, so when you're looking at these bigger companies like Apple, Google, you know, their market caps are approaching $1 trillion. These are, you know, these 2 or 3 companies here, still smaller market caps. Again, $40.9 billion market cap. Twitter as well, $36.2 billion market cap. Recently, you know, just seen Twitter starting to move here as far as you can see this previous downtrend in momentum on RSI and PPO. These negative downtrends have been broken, and now you can see these uptrends are being formed. It's a good looking chart. So some of these charts will look similar. In tech, you'll see some similar charts, but you got to like the fact that this downtrend was broken and you have this uptrend. And then you have previous resistance at this 45.85. It moved above it. It broke above it. Now it's kind of testing that level again. Just watch. Some of these names are quite interesting. The other thing to watch is that if you do believe in a bigger pullback that is coming, just watch watch the 10 week. Because a lot of times with these good tech charts, you'll see the pullbacks to the 10 week. If you're seeing the fundamentals or the technicals still hold in with momentum or relative strength, the 10 week can be a very good place for entry. That's Twitter. Again, this is just looking at the daily chart, showing very similar things to what the weekly is showing. And Disney. So Disney is interesting as well. Recently, so it's a bigger company at $229 billion, but with its large volume of content, some people are very excited by that. I think there's an activist investor that came out recently and said they should forego their dividend and focus on increasing their online content, and becoming closer to like Netflix model. So just watch it. It's an interesting chart. Again, just similarities, broken downtrend previously on the RSI and PPO. And now we're seeing an uptrend. And on the RSI, you got so it tested on the weekly, it tested 50. If it can stay in that kind of top end and rebound higher, obviously that's positive. You can see there's a previous resistance level. It got through and now it's kind of testing that. Let's Disney, and this is just looking at the daily. Again, resistance levels and above is where we'd see the next level of resistance. So next thing I want to hit, so that was mega cap tech, looking at some smaller communication services. The next area I want to look at is semiconductors. So semiconductors offer a very interesting investment opportunity, as we know. So it's a critical component in technology functionality, really the electronic guts that make devices go. So very good semiconductors. There's some very reputable companies and investment opportunities in semis. So established semi companies have products that are key components in technology value chain. And the biggest point I want to make is that some people see them as volatile, but some of these better technology semiconductor companies often supply a lot of the mega cap tech. So they often, once they have a good product and a good established product line, they really have a really good ecosystem that they are having consistent earnings or strong earnings and good free cash flows because they are selling to these companies that have substantial demand. So there are some very good tech companies, mega cap tech companies out there. So with that, just want to look at some of the bigger semis. If you look at SMH and pull some names from the ETF. So I just want to show you the CSV upload feature that I was looking at that can help you out. Okay, so what I did is the CSV upload is what I was talking about is that, so if you look at, so this is a VanEck Semiconductors ETF. On a lot of these, when you go to the web pages, there's a spot where you can download all holdings, and basically it'll give me a list of all these names in a Excel CSV file. And then what you can jump to in here is that there's a place when you're looking at a new chart list to basically download that CSV upload, to download that so upload that CSV file. And then what will happen is you'll be able to create your own chart list. And so what I was able to, so basically with that process, I basically just took that data from the SMH, uploaded it, and then I basically have my list. Simple thing obviously do is sort by scooter, number in sorted order, and then basically you have a list, right? And so from that, you can basically dissect some of these better charts. Obviously, the higher scooters is an easy place to start. What you can also do is you can look at them all in an RRG, and you can kind of say, okay, I like stocks that are, if they're improving, great, or if they're just starting to move up from the lagging to improving. So again, it's a really easy process to kind of go through the upload and then put them in a chart list, and then obviously, look at them however you want to, right? But it is a very quick process, and it's an easy way to get tech ideas is to kind of take some of these tech ETFs and upload them. So with that, let's hit a couple charts here on the semis. So again, these will be some of the bigger names. Again, so if you look at NVIDIA is one of the darlings for semis. And again, just to note, so you've seen some of these really good semis that have run quite a bit. So we saw it go to basically $589, almost $600. What I have been seeing, especially in some of these strong tech charts, is that you'll get this run, and then it'll get look a bit extended. A lot of people will get eager on the momentum and buy higher. But if you're patient, a lot of times you do have opportunities at the 10-week or the 50-day moving average. So again, if we're thinking that there's some potential weakness coming, a good place to look is that potentially that 50-day. So Taiwan Semi, again, just to show some of the stronger names. Again, if you just look at these charts, there's similar characteristics, right? You're getting higher highs in momentum, right? If you look at your PPO, you're getting decent relative strike trends. You're getting kind of these breakouts where you're having basically a flag pattern where get this rocket up, consolidates, and then continues higher. So you are seeing, if you look at some of these top semi names and top tech names, you're getting some very good charts. So Qualcomm, again, you're seeing the same type of thing, right? We had everything bottomed, obviously, with the COVID sell-off in March and April. Came up high, had the strong move, a bit of a consolidation, and then keeps on going higher. So again, Qualcomm, again, provides a lot of its semiconductors to the big tech names, and that's why this is such a strong name. ON Semiconductor, some similarities. Obviously, there's some potential resistance here. But again, a good name, again, higher highs and momentum. I'll just hit a few of these, but again, you can see how pulling this list, taking that to high scooter names off that SMH ETF, gives you some good names to work with and look at charts. Skyworks, another good chart. Again, same type of thing. Strong run, consolidation, and then mixed higher highs. So there are a lot of good ideas in the semis. Again, AMD, some similarities, right? So we are seeing a lot of good names. A lot of good semi names here. A lot of these, again, good charts, right? Similar patterns. Similar patterns. Okay, so we'll go back to my presentation here. So the next area I want to hit is, again, I'm not sure how much, might end up running out of time, so I might do this a little quicker. Mobile payments and e-security. So as we get to, again, one of the themes is that we're getting more tech-oriented, younger generations are more tech-focused. So you're going to see more, obviously, activity over the internet, and that's where mobile payments and cybersecurity will become even more important. So important areas of technology with increased e-commerce activity and risk of online crime and hacking. So if you want to go, if we're going through that theme of trying to find ideas through ETFs, a couple of ETFs to look at are the iPay and the Hack ETF. Again, these will give you mobile payments and cybersecurity names to look at. Specifically, some mobile payment names. So if you look at call it more the pure plays or more the newer names, you see PayPal and Square. They've been really great charts. They've had a lot of strength. If you're looking for a little less risk or the longer, more established names in the mobile payments area, obviously the credit cards like MasterCard, Visa, American Express, they're also names that kind of are part of this space, right? They've been doing it for a while. They've spent millions and millions of dollars and on their e-commerce and how to on their mobile payment space. And then the other part is the hack area. So the cybersecurity names. So that is Zscaler, CrowdStrike, Okta, FireEye. Forgetting some. What the heck? Norton LifeLock. So again, these are all cybersecurity names. As there is more traffic over the internet, more e-commerce, you're obviously going to need more cybersecurity. So I will just hit that quickly. I don't want to go into all those individual names, obviously. So I will just hit a couple. Let me just hit the ETFs. And what I'm and the other thing to look at is when you see performance, if in an ETF that looks favorable, that kind of compel you to look into some detail on some of the holdings. So if you look at the iPay, so again, that's the mobile payment ETF. You can see previous highs are 55. Obviously, the COVID hit everything. It made higher highs above 57. And now you can see that this past week, we basically challenged those highs. Again, the chart looks relatively intact so far. So just, again, this iPay area is something to look at on mobile payments. Hack as well, some similarities here. You can even see maybe a bit of even a bigger price move. Previous highs before COVID hit was around 44. Recent highs hit 51. Same type of thing. We just recently kind of tested those highs. Again, these are weekly. If you look on the daily, you get a better idea of that resistance level. But again, you're still seeing these charts look pretty good. If these can continue, so you have the PPO that has turned positive, didn't get negative, basically stayed above the center line and turned back up. So again, a good looking chart for the cybersecurity ETF. The next space I want to hit is cloud. So cloud, you hear a ton about cloud, and rightly so. It's obviously a very big component of technology, and a lot of people, I think there's obviously a lot of names in here, but I just want to kind of give a quick overview of cloud computing. So what it's doing and why it has generated so much interest and why it's considered an innovation to the previous kind of tech landscape. It allows companies for delivery of computer services over the internet. So there'll be service providers that instead of companies basically required to have all their own infrastructure to provide a good e-commerce presence or to get the computing power they need. Now there are a lot of providers that can buy that service. So a lot of these cloud names have really taken off, just as far as companies have found their services very valuable, and the fact that you don't need to have that sophistication within your company, where you can basically call it outsource, call it pay for it, but you don't need to develop it in-house, and you can basically outsource that. And that has been one of the biggest tailwinds for the continued success and investment in the cloud computing and cloud industry. So again, the point is businesses only pay for services used and can efficiently scale as their business grows. So again, not having that huge capital cost and trying to figure out, okay, how much should I be spending on my capital allocation to technology? So if you don't have to spend that yourself, then you say, okay, well, I don't need to spend it. I'll just deal with a cloud provider. As I need a new user, I'll add a new user. But you don't need to make that capital investment. And obviously, some industries and companies don't have the resources or capital to make an upfront investment, and rather just pay some of these cloud providers to do it. And some of these companies don't have the expertise to do it. So outsourcing and getting someone else to do it can be a big help. And so the third is the benefit of the cost, speed, productivity, performance, reliability, and security. So again, the cloud provides a big improvement in all those areas. And that's, again, why there has been such big attraction to these cloud providers. So that is one of the biggest areas that I guess I'll take a little bit of time to look at. Some of you guys will know some of the names. So there are a few cloud ETFs out there. Easy to kind of pull it up and go through some of the names. I'll go through a few of them as it is a vibrant and growing sector. So cloud ETFs, so okay, you can see them listed there. Notable cloud names, so Zoom, Twilio, Zscaler, Salesforce, Coupa Software, Shopify. I'm gonna forget a few, but you can see there's some intersection with these and some of the previous names I looked at. So there is obviously, cloud names intersect some of these other areas, but it's important to note how strong some of these the cloud is becoming, and the cloud as an investment, it's something you want to have in your portfolio. Recently, so even people like if you think of Berkshire or Warren Buffett as a bit of call it an old school investor, value investor, what have you. So even he, or his company Berkshire took a stake in Snowflake, and as far as you're seeing when you see big investors like that start to change their philosophy or where they're willing to put money to work, it's something to take note of. So again, a Snowflake has a price to sales ratio above 200, and that is that is considered by almost anyone's standard astronomical. So the fact you have established institution like Berkshire Hathaway willing to get in and invest in the cloud with the Snowflake IPO, it's something to take note of. So the last note I want to make on this slide is that you are seeing some lofty valuations. So if you go price to sales, price to earnings, you do see some of these cloud names. If you look at a Zoom, maybe even Twilio to some extent, you're seeing these massive price to sales. A lot of them don't even have earnings, so you can't use earnings as a measurement. So the fact is, you're getting these, you are getting some very lofty valuations, and obviously that can lead to some volatility. So, as you're if you're going through and dissecting some ETFs, just note that some of these do have very lofty. Some of these names have lofty valuations. So using an ETF is a reasonable way to play this sector. Again, it's just there is a decent amount of risk if you only have limited knowledge or you're scared of the volatility. Picking one of these ETFs, looking at some of the charts, is a good way to play these for some of these more risky sectors. We'll take a look. To take a look quickly at some of these cloud names. So again, if we look at, start by looking at the ETFs. So if we just look at this cloud ETF, much like some of the previous charts we looked at, like with Hack, again, you're seeing this, we had this dip, got new higher highs, again, went lower and then higher. You'll see some similarities with the cloud ETF here. So again, previous highs before COVID was $18.50. Now we got up to $26. Again, you're seeing positive momentum with the RSI and the PPO making higher highs. Just watch, potentially seeing, as we talked about earlier, we're starting to see some weakness. Just watch, go into the dailies with some of these if needed. So Sky, again, you're seeing the same thing in all these ETFs, right? Same type of thing, right? Same type of thing. Again, RSI, higher highs, higher lows. PPO, similar story. And sorry, this is just a snowflake really quickly. So from that, let me just try to dip in quickly to some of the cloud names. So some of the cloud names, again, pulling from an ETF, doing a quick number based on Scooter will kind of get you some of the better names. So this is what we're kind of looking at. So one thing to note, again, if we're worried about some impending kind of weakness in the market, just watch. A lot of these you'll see that they're making new highs, or they're really close to those new highs. So just watch that. Watch if it corresponds to higher levels of momentum, or if you're seeing divergences with a higher high in price but lower high in momentum. So that's Zoom. Obviously, it's had a great run. It consolidated for a bit, but sure enough, it came right back up and made new highs this week. Twilio, another strong chart. So when I look through some of these cloud names, what you saw is you'll see some charts that had basically tested resistance. Some have broken through, some have basically tested and are falling lower. But just watch for this. Again, Twilio has broken through, so it makes it obviously an interesting chart. See if we do get weakness, if we come back and test this previous resistance level, and if it acts as support. Watch obviously the RSI and PPO to see if the momentum can continue higher. Again, Paycom, I'm just trying to show you some of the names here. Again, the interesting part is there are some good charts. A lot of them have broken through previous resistance at previous highs. So again, this Paycom has gotten through that old 340 resistance, got up to 380 this past week. Zscaler, similar thing. So again, seeing kind of an ETF or a sector that has these strong charts definitely makes you pay some notice, right? We're seeing all these charts where it broke through these previous highs. So just watch these closely if you're not in them. Again, if you believe in tech weakness, just, you can wait obviously, but just note that there are some really strong charts in this sector. Next chart, again, Paylocity, same type of thing. Previous highs, let's call it around 150, 155, broke through that resistance as well. Salesforce, so it's interesting, when you go from looking through some charts, you get the higher scooters, and then they've actually, this is still a high scooter at 92, but some of the charts before this that had higher scooters, you saw a breakthrough resistance. And these next few charts, I think you'll see, is that a lot of them basically got to resistance and they're kind of struggling there. So just watch for that. Similar here. So last one was CRM. This is Coupa Software. So same type of thing. You're getting to resistance level. Can we pull through? Or are we actually going to see momentum fade here and basically falter? Shopify as well. Similar thing. You're kind of testing highs, but just watch momentum. See if the histogram potentially has bottomed. So watch if that continues to improve and that the market goes higher, or if this starts to falter and RSI continues lower, and we'll get lower price and expect lower price in the stock. SBS Commerce, again, this is one that has broken through its previous highs. Workiva, again, having a problem where it hasn't broke through. But you'll just see there's a lot of positive charts and still have good momentum. So just looking at these, the thing is just to look at some of these ETFs. When you do see this strong performance in these cloud names, it's something to take note of, right? When you see ETFs and you dig down and see a lot of good charts and good performance, it's something to take note of, right? So again, looking at the charts that have broken through, and then if you believe there's some weakness, watch to see how it performs if it holds previous support levels, previous resistance levels. And then if you get some comfortability, or you're starting to see, if you look at the dailies and you start to like what you're seeing, getting at the 10-week or other levels where other levels support to start a position can be a good idea. So I'm getting close to the end of my presentation. So I was trying to get some bull and bears, and unfortunately, the best I could do for a bear was a koala. I looked for a grizzly, but I could get got the snake. So I do think overall there are some good opportunities in technology. The larger idea is that to make sure that you're aware of some of the components of technology and kind of pick your spots, right? Like you don't, have some diversification with your technology holdings. Take a name or two from each of these. with your investments. Don't need to be focused on one area. That'll obviously provide your portfolio some diversification. You don't want to be too focused in one area. Obviously, if it hits one area based on any particular risk in a subsector, you don't want to see your portfolio take a big hit. So again, make sure to diversify within technology. And again, so that means looking at some of the mega cap tech names, those big communication service names, semis, cybersecurity, mobile payments, cloud computing. As the last one I looked at, and just note that cloud computing is a big area of technology investment and worth you taking a good look at. Last slide, as I kind of mentioned in the presentation. So there's obviously the bear side, the bull side. So if we are seeing if it starts to tip to the bear side again, we focus on charts. So, if you're looking at your weeklies or dailies and you're starting to see the charts weakening, again, look for that support at that potential buy opportunity at $50 at the 50-day. If we do get some more selling, and it doesn't look like that's going to hold, just let the market go down. If you want to start some entries at the 50-day and hold off more buying until you see some confirmation, that works. But some people, as I looked at some of those charts, you can see the 10-week or the 50-day was a good support level. So what do we want to see to kind of encourage investment? So if we do actually get a big drop and we actually move through like 30 on the RSI, a lot of people like to wait to get to above 30 on the other side of that RSI. So we get a rising RSI above 30, bull stochastic rising above 20, PPO histogram bottoming, right? So those are three things to note as far as looking for buy signals if we're going to see a sell-off coming up here. If we do see a harder sell-off, again, what you might want to look for is that a bullish divergence, right? So if you're seeing the market actually have a strong sell-off here, be it on the election basically held up as far as not a definitive result, stimulus not getting approved, and then so when I'm thinking about the market, what's kind of the really bearish scenario? So basically, you'd be no stimulus before the election. You have a result that doesn't get decided in the election for a while, so that again holds up stimulus longer. All in the meantime, that you have a surge in COVID cases, right? So to me, that's the bear scenario. And if you start looking at, I'll quickly pop to the Johns Hopkins site, and you can see how the cases are starting. There are some worries on the cases. So as an investor, a lot of investors that are keying on the potential bear side, that is a potential worry and something that people are keying on. So again, that's my bear case. So if you do kind of get that, you do get some aggressive selling, what you would look for on the other side is a bullish divergence where you're getting the lower lows on price, but you're getting higher highs on momentum. And that would kind of give you a hint that, okay, start looking for ideas because it looks like though we're getting continued selling, momentum is showing that momentum's bottom and we're getting that bullish divergence. If you believe the charts are strengthening, again, we're just seeing improved momentum. You want to continue to see those higher highs and higher lows on RSI and PPL. So as some people talked about, we're upcoming to some earnings with tech. Last time this happened, when we start, seeing a bit of a sell-off pre-earnings, what you did see was, some weakness. And then when tech came, there was a lot, those big names had such strong earnings. And the fact that they are such big names in the S&P and the NASDAQ 100 indices is that with that strong earnings momentum, it was hard to kind of stay as skeptical, right? You did see some buying come in. So watch for that as you get these tech names reporting. They're big names. They've usually, historically, they've been quite strong. So just watch how they report and the reaction. Personally, I'd expect some muted action, maybe potentially on the first few names. But I think if you continue to get continued more strong beats on the earnings front, I think it could be difficult for the price action to be subdued. So I think if you do get that, just watch that you do get that buying. If it doesn't come in, that'll definitely tell you something that you're not responding to strong earnings. But just watch those names and watch be it the volume, be it the momentum. that basically momentum's confirming the price action, and you're seeing, and you get those higher highs in momentum.
Super. Thank you, Barry. Let's just check the chat room and see if there's any questions. Any questions for Barry? If you could fire them in there very quickly, and we'll just get those answered for you.
Cool. So just the last thing I just want to show everyone here is, I'm not sure, I used to use this John Hopkins site quite a bit. I've used it a bit less, but mostly because I've been getting sick of hearing about COVID cases. But as we get into the winter, the worry was always that kind of second surge, right? So if you look at the total global cases, okay, so we're at 40 million. Obviously, that's quite high. What I find of a lot of use, I guess, is this basically the histogram on the far right corner, where we're getting higher again. Cases keep on growing. So unfortunately, so we had that previous surge. Seemed like we're under control a bit. Different areas of the world were going higher. So the world picture will only give you so much of it, and that's why when you kind of go to this COVID site, you can go to individual countries, and that's where let's say I see a little more value, especially in, obviously being North America and the U.S. being a big driver of the global economy. Doing kind of more analysis on the U.S. cases. So after that first surge, we saw it kind of we saw cases go down, saw another surge again, and sure enough, they receded. Now as we're approaching winter, a lot of people have been talking how about colder weather is a better conditions for spreading the virus, be it more people inside, or be it just a lot of talk about sunlight, decreasing the half-life of the COVID virus, all that kind of stuff. So just note that we are seeing kind of more cases on the COVID side. If you're looking for a catalyst to sell, some people have been talking about how we are getting more COVID cases. It's something to watch closely. So I do think that's something to watch. I do think overall people in the economy have adapted to COVID. When it first hit, it was kind of a shock, and everyone was alarmed. The reaction of governments and government central banks, whatever you want to call it, there was obviously a lot of worry. The fact that we've had it around for a bit, I do believe, I believe in people adapting, being more responsible. That being said, in the U.S. there hasn't been a united approach. So there are some worries that it could peak, and there has been a united response. It's state by state. So there are some worries that it could keep on going higher. And I think if we do see, we're still in October, haven't hit the heart of winter. So there is some worry that this really could elevate, and that could cause, be it another round of panic. So that is one of the, one of the potential bear arguments out there. So just watch, to look at, to go on this site quickly, click on the US, you can click on Canada too, but there is some good data here to look at. Besides looking at US, looking at how some of the European nations have fared as well, and that's where you're getting some other, some more worries, right? When you're starting to see these, again, you saw previous highs, again, you're getting new high levels of new COVID cases in different countries in Europe. So that was Germany. You look at the UK, again, seeing something similar, right? So something to watch. As far as the bears are starting to point to this, something to keep, easy way to keep tally of is to go to this the John Hopkins site for your data.
Hey, Barry, there was a real quick question for you. And it was, what would you want to see before allocating to underperforming sectors, financials or conventional energy?
Yeah, so I think it goes back to, let me see if I can just pull something up, that'd be better. Let's just try to look at the XCG here. So I think memory's failing me, but yeah, so it's obviously, every time I look at this chart, it hits my head, but it is tough. Obviously we saw this massive pullback. I think, Greg does a great job on energy. He's, he pulled up a few charts. Myself, it's somewhat similar, right? You're just seeing, there's so many weak things on these charts. Obviously, you want to see things improve. The weekly, you get to drill down. You're seeing, we had this, big sell off in energy. We hit these highs, call it 610. So I'm just looking at the XCGs just to take a quick look at Canadian capped energy. I do want to see improvement momentum. We can see that the good thing is it's okay. We haven't got sunk to these, these COVID levels where there's a massive selling. We're still getting higher lows. The problem is our highs, we couldn't get above the 10 so it goes the same for this chart as it does most charts, right? You want to see your RSI trend higher, go above 50. You want to see your PPO. So another thing I like on the weeklies, when we had this big bout of selling, you see this massive histogram. If this histogram, so when we had a strength, we obviously had positive histogram that dwindled. If we can just stay, if that histogram can just make it these little bars, meaning that the signal line and the PPO line are staying close together, and then we're actually just we're just dipping out slightly low in momentum, and then we're actually going higher. That's great. Some people love these. It's a bullish sign to me. The fact that you're not getting this steep selling that's causing this massive burst in the histogram, you're just getting slight and going higher. That would be a bullish signal. It's the typical technicals you look for. And again, Greg has done a lot of great work with looking at 20 days in the various different subsectors. So there's a few things, but it still goes back to the momentum side. You can look at XEG, look at some of the big names, the Suncors, the CNQs. I know Suncor's been a terrible stock. CNQ a lot better. So look at some of these, the bigger names. But it goes back to what you're looking at on and everything. And for me, if you can, especially on the histogram, if we can kind of pull higher after just a slight decline, that would be a bullish signal for me. Obviously, you can go down to the dailies. The other thing to watch, just quickly, I'm getting close on time here, obviously. So, we had that dip. There was actually a gap. We're kind of testing the high end of it. I think we're above the high end. We're still above $40. So just watching crude a bit is big, right? Because you have crude above 40. If it's holding, if we get a weaker US dollar, that'll be a tailwind for crude. So obviously, strengthening crude, that higher commodity price is going to drop down to the earnings for the energy companies. So obviously, watch that crude chart, right? If we can kind of hold support here and start trending higher, that's obviously going to be very bullish. If we get a weaker US dollar, if we get a big stimulus package that impacts the US dollar, that'd be great for obviously commodities. So for oil especially, and for crude to move higher, that weakened US dollar would be a great tailwind.
Perfect. Hey Barry, thank you very much. Nice compliments in the chat room about your presentation. Thank you for doing that.